Okay.
All right, cool. Hey, everybody. How are you? Thanks for joining us. This is short notice. Got the crew together. Ryan Gorman, my co-host, alongside CJ and Monty, crypto analysts over at Market Rebellion. And and we are here to talk about the bull run. It's happening. We're getting quite the parabolic up, then a little sideways, a little retracement, bouncing off of tops and bottoms. But we had a lot of questions in trade to chain community, particularly on what thoughts are with it moving upwards or downwards, where those resistance levels are, and basically the overall market appetite. So I want to go to CJ and Monty because I want to talk about some of the technicals with the price action that's going on. Now, let me see here. Hang on. I want to make sure we got, okay, so we got a few watching. We started a little late, but CJ, if you want to bring up the charts and kind of delve into what's happened over the last, let's call it 72 hours, that'd be terrific, man.
Of course, of course. Thanks for having us as always, Alex. Beautiful day. Great time to be in the Bitcoin markets. Last night, we were up till around 12 o'clock, 1 a.m. The Asian market has just been pushing this thing continuously higher, and the bulls have really not given anyone a great break. Discussing the technicals and looking at the sequential indicator specifically, we now have it on our platform, so we're very excited that we now have that technical trading system available. But if you look here, we have a green 8 doji candle on the daily chart. And so we talk about nines on the sequential indicator here quite a bit and how they can be kind of an indication for catalyst in the sense that it's going to have volatile price action. So if I allude to like VGX for just a second, I want to show you an example of a 9 that the trend topped on. And that one was right here. It's on a different time frame, but still did top on that same level. Here you can see, here it is. Here's the good example. But you can see that 9 reversal after we peaked on that level. And so previous to that, we had a massive bullish 8 engulfing candle. So Bitcoin is a little bit different in the sense that we're now reaching a doji candle, which is a little bit concerning because it means that, no one is quite sure where the momentum of the trend is going to continue. We're reaching a 9 tomorrow, which is an indication of like a catalyst in price. So it's a warning signal. We've gone up so fast. We're going to have to watch very closely for a potential reversal when the bulls inevitably do take profit. And though we like to be very confident in the midst of bullish uptrends, if you look what happened in 2016 and 2017, we had over 5 drawdown periods of roughly 25 to 30%. So there's probably going to be quite a few whipsaws such as that as we, begin this parabolic run. So watching out for that. The technicals are giving us a bearish warning signal tomorrow and the next day. Just something to watch out for.
The price of Bitcoin, as it went up, it bounced several times off of 18.2. Do you think this resistance level we have to get through, or was that just active profit taking, as you mentioned, and that dip was just an opportunity to buy at a discount before we take a more extended bull run?
Yeah, so that's a really good question. And it's a difficult one to answer because we don't know. I see these two levels as being very strong support, namely 16,400 and 15,800. Those are established levels. Now, we only spent a very short period of time above 15,000 in 2017. So the trend never really got an opportunity to form any meaningful support or resistance levels. So I don't see any resistance to the upside personally, other than previous all-time highs.
Yeah, I'm in agreement with CJ there, and I just want to touch on something that he mentioned earlier, and I think it's kind of a phenomenon that we're witnessing right now because if you look at the wicks on the most recent daily candle, the doji that CJ was talking about. I mean, it was a pretty wide range, and like you guys mentioned, we hit some resistance at 18.2 and 18.5, but it was quickly kind of rejected and dipped all the way back down before kind of middling off. And when CJ was talking about in 2017 those massive drawbacks of 25% that happened like 5 times during that period, that is a massive concern that it's really hard to shake during a period like this, right? Like just the market psychology of a bull run. You expect profit taking to happen. And I think we did see that to a certain extent here. But what's really different now, in my opinion, is that this is just much smarter money than we saw in the 2017 bull run. So I think the drawbacks are going to be less substantial. And I think the profit taking is going to occur less often. So I think the people that are getting in now are more, I mean, you have all these institutions and you have major players getting in. And I think they're thinking a little bit more long term, and they won't be as quick to sell during a profit taking range. So I think that this is going to be a more sustained and healthier uptrend. So I mean, it would be nice if this was the extent of the drawdown that is happening currently, but I wouldn't be surprised if we did draw back just a little bit more. Nothing substantial, but just retest those support levels that CJ mentioned earlier. So I think if it can retest those levels and then rebound and get some more bullish momentum, I think that'd be a very good signal for the health of Bitcoin.
And more to your point about more sophisticated investors and participants, you have Stanley Druckenmiller, you have Ray Dalio kind of jumping on the bandwagon, so to speak. And even though these aren't sophisticated players like they are, but like the likes of PayPal and all the hundreds of millions or millions of people that are being introduced into the Bitcoin ecosystem through these easier on-ramps, it makes sense that even if it does go down, that's an obvious buy the dip opportunity, because over time, Bitcoin, I mean, supply and demand is the most basic theory of economics. And as more people start buying Bitcoin on PayPal with that access, it almost kind of has to go up. It doesn't mean it'll go up astronomically, but it has to appreciate in value over time, at least in the interim, no?
Yeah, I agree with you, Ryan. And there's another good point. It's like retail money is really not coming into the space yet. And one of the indications that we use to kind of verify that and monitor that is just Google search trends. So if you look at the term or the search term Bitcoin on Google, there is very little searching going on. So retail interest and the interest from, the common folk, so to speak, has not necessarily been there. Where we've seen the majority of the volume in the market is from the CME and these options markets. We're having record levels of open interest each and every day. So to Monty's point, these are, quote unquote, more sophisticated institutional investors. Does that mean that they are prone to psychological hype cycles? We shall see. Nevertheless, I think, we had Charlie Shrem on our podcast earlier this week. And one thing that he said, him being an OG and a guy that was around since 2011, 2013, is that back then there were legitimate fears that Bitcoin wasn't going to make it or was going to die off. I think we're pretty collectively at a point now where Bitcoin's likely not going to die. Like, it's going to be around, and the majority of people who are investing in it for the long haul.
No, that makes sense, especially when you have support from the likes of a PayPal or a Square. You have MicroStrategy buying hundreds of millions of dollars worth of Bitcoin. They didn't do that to sell it tomorrow, right? They're in this for the long haul, for better or worse. And, it's funny you mentioned that Google search trends weren't really showing Bitcoin until, like the last day, because earlier this week, Bloomberg's Vildana Hayrick had a great article just comparing this rally to the last rally, where she said Bitcoin's gunning for a new record and no one's really talking about it. And this was just a deep dive into the search trends and how the retail interest just isn't there yet. If you want to find out where the interest is in the Bitcoin rally, users of Trade the Chain were able to see that tweet volume for Bitcoin went up nearly 100% yesterday from its daily average. And as of now, it's still up 87.62%. So the chatter, the conversations, they're happening on Twitter, possibly on Telegram and other places, and they're just now starting to trickle down into Google search results. So when that retail FOMO kicks in, I mean, the rally definitely has legs to it.
And a couple of things that I just wanna point out, and there's some good chatter from our good friend Wen Mullet in the chat, is the difference between 2017 and now is there's back then, and Ryan and I were discussing this earlier. Back then, you had a lot of ICO projects, and when people said, hey, why are you buying Nethcoin? They're just like, because it's gonna go up, man. And now.
Man.
Now it's about institutions buying it. It's about crypto funds trading it. We have professional grown-up market makers supporting and stabilizing prices of certain coins. It's a much more grown-up market. I think it feels different to me. I think it's acting differently to everybody. But, our good boy Wen Mullet on the chat, stocks, dollar, gold, all down, BTC flat. Where's the money going? And that's a good question. I mean, you do have, certain trends in the market. And where is that money going? Another thing, point out, when the institutional buying come in, those BTC are stored, so supply will go down. Here's the great thing about this market and how it's evolved. Back in 2017, we were straight spot, pretty much 99.9% straight spot Bitcoin buying, right? And so if we had what we had today without the addition of certain projects or instruments such as futures, options, perps were invented in crypto, stuff like that. There might be a thought for a capacity constraint Bitcoin market, but there isn't. All those instruments have done is expand this to infinity and beyond now. So we're not going to run out of Bitcoin. It's not going to happen ever. It's here to stay. But I do feel that the last couple of days have been a very different feeling bull run than what happened in 2017.
Absolutely. I mean, during that ICO boom, it was like the tech boom of the late 90s, early 2000s. You just took a dart, threw it at a board, and that's the stock you bought back then. I mean, I paid for my first year of college doing that in 2000. Like literally just bought randomly without even remembering what the tickers were. And, that was the same thing people were doing with ICOs pretty much. And there were no real fundamentals behind it. But now you have these fundamentals, you have this institutional support, and even something like a Binance coin, you can look into the financials of Binance that support the coin and what they were doing with the token burns up till recently. And there are actual real fundamentals in this market now. And not to sound too much like a cheerleader, but one great comparison to a traditional asset would be the real estate market in Manhattan. It may have its dips here and there, like during the pandemic, but ultimately, if there's a finite supply of something that lots of people want, prices have to appreciate over time. Bitcoin has a finite supply and an increasing number of people want in. So it only makes sense that the price would appreciate over time. And there may be dips where there's a buying opportunity, like right now. If you want to buy something in Manhattan, now's the time. Get in now. And this feels like that opportunity with Bitcoin with this dip. This is time to buy this dip. It feels like, anyway.
Monty and CJ, one of the biggest things, well, I mean, what every investor wants to know, right? What are the lows going to be? What are the highs going to be? We never know that. No one ever knows that. But what sort of resistance levels are we hitting on the top side? And what sort of floors do we have to keep from, having some sort of red alert on the downside?
Yeah, one thing, I'll let Monty answer this one. I just want to point out that the S&P topped on a 9 2 days ago. So you were warned.
Yeah, back to what you said, Alex. I mean, it's really hard to say, right? Because like we talked about earlier, we're kind of venturing into uncharted territory here. It's hard to really see any strong resistance when we're kind of venturing into an area that we haven't been in before. And I totally agree with Ryan that this is a good time to buy the dip because it's hard for me right now to picture price dipping below 15,000 and remaining there. It's just hard to imagine that all of a sudden these institutions, because like we talked about, the institution the institutional interest, they're not just getting into it to sell tomorrow. They're putting this on their balance sheet for long term. So I think the downside right now is very small. We could experience some volatility, but for me, anything less than, I mean, I'm looking to buy whenever price dips at all. And I feel like if it dips to anywhere near 15K, people are going to gobble that up because it's just not going to happen too many more times, I don't think.
I don't know how many times people can slap themselves when it was down around 10K, just a short time ago, being like, I'm going to wait for that dip.
And just to your point about support and resistance levels, like there were many analysts in 2017 who had macro models that projected Bitcoin would top at 10K. And those were pretty rational models. And yet we went all the way to 20K in a matter of, only weeks. So I look at 10K in the next market cycle as being similar to 100K. Who knows what could happen psychologically when we break those levels. And Ryan, like you mentioned earlier with the .com bubble, the ICO market may have been like 1/10 of that. That like 2001, I wasn't around, but that was insane. Those were legitimate companies too. I remember this one that Yahoo bought after the .com bubble. At the height, it was valued at 325 billion. And then only a year later, it was at 250 million. It was a search engine. The name escapes me, but Yahoo bought it and then it didn't do very well. But those were legitimate companies, and Bitcoin's entire market cap right now is what, 300 million or something around there? So
Akamai, because they had Yahoo powered by Akamai, if that's how you pronounce it. But yeah, to that point, and let's all not forget Pets.com and their Super Bowl commercial before the collapse.
classic.
Can we pull up CJ the coins page, the Trade the Chain coins page? I want to take a look at some of the relative sentiment that's going on here.
Yeah, just let me know what you want, and I'll pull it up.
Yeah, hit the coins page. So right now we're looking at, 87% increase in relative tweet volume, 51, just about 52% relative trading volume increase over the last 24 hours.
That's significantly from yesterday. It was so much higher yesterday, both of those metrics.
Yeah, Ryan, what did it hit yesterday? Because really that was when it was hitting the peak. Now we kind of went through a trough. What was the social media outlook on it yesterday?
Yeah, sure. The relative tweet volume yesterday almost hit 100. I think it was like 97.9 at its highest that I saw at 98. And the relative trading volume was well over 60% compared to a normal average day. So, and bullish sentiment, the daily sentiment yesterday, I think it was at like an 87. I mean, that's the highest I've seen Bitcoin. It was crazy. And a long-term sentiment, I think it was at 83. So, the smart money here is that this is more of a long-term play, and you shouldn't be looking at a day-to-day basis, day trading it. You should be looking to allocate, as some say, stack sats, and just hold on to them for the long term, because if a few institutions are getting in now, Anthony Scaramucci's Skybridge announced that they were going to look into Bitcoin allocations in their funds, and they're a massive asset manager.
The Mooch is jumping in.
Yeah, he can't be the only one. Mooch can't be the only one.
Listen, 2 years ago, Mooch didn't know what Bitcoin was.
I don't think Ray Dalio did either, and now he's as well. So I think, when you have all of these large asset managers starting to look into it, there's going to be a FOMO on the part of the smaller and other managers that are lesser well known, because they don't want to be the ones that were left behind.
Are we looking, Monty, at a floor of about 17,000 right now?
Yeah, I think that's pretty optimistic, but I think, realistically, I think it could very well retest 15K, but for me, that's the absolute bottom. Those two resistance levels or support levels that CJ has, right there are ones that we've been talking about for a while during this bull run, 16.4 and 15.8. I think both of those are pretty strong resistance levels. And if it doesn't catch at 16.4, I think it'll definitely catch at 15.8. But that's even if it does retest those, because like we talked about, there's a lot of reasons why I mean Bitcoin may not even dip at all and retest those levels. So if the momentum does shift, which I don't think it will tonight, I think the Asian bulls will pick up kind of where the momentum left off. And I mean, we kind of had a pretty strong dip there to almost 17.2 and bounce back no problem. So I think bullish momentum is going to continue, and I don't even think we're going to retest those support levels.
Okay, I'm gonna actually direct this question to CJ because CJ has a little experience in this. But CJ, when it comes to hitting price levels such as this, are the miners going to be affecting price at all about taking profits off? I mean, we all have to remember if the miners can't get, let's say, loans against their BTC, they have to cash some out in order to fund operations. That's just how the business model works. Is there going to be any impact from the mining operation side of this?
Well, let's check out the Bitcoin difficulty ribbon, because that measures the amount of hash power and difficulty on the Bitcoin network. And essentially what we can do with this chart, excuse me, just give me a sec. What we can do with this chart is understand how much the miners have capitulated at this point. And another thing that is important to understand is that after the halving, Bitcoin miners they still are, I would say to some extent, but they're no longer going to be the primary sellers of Bitcoin like they have historically because of these mining halvings. So they're not generating as many mining profits in Bitcoin. And that shift is likely going to be towards exchanges being the majority sellers of Bitcoin. But if we look at some recent price action, the Bitcoin difficulty ribbon, you can see that these periods of compression, this tells you that miners are leaving the network and are ultimately capitulating. So we saw a massive amount of that during the drop to 3K in 2018. And then we saw another large compression period towards the 2020 halving. And we're still kind of seeing it, or we saw it, but now we're slightly coming out. And I think that's because the existing miners who are able to stay in the market are pretty profitable. And so, we'll have to see what happens, but judging by the overall network hash power, I think the majority of miners who are going to sell are out of the market by now.
Okay. All right, good. Well, I mean, it is good. It's a worry that we, people always have it. There's always this fear that all of a sudden, 100,000 Bitcoin blocks are going to be hitting the market or the OTC desk. What about Ethereum? How is this bull run affecting Ethereum? And basically, the DeFi markets have taken dips. They actually didn't bull run like Bitcoin did. I mean, let's see here, the chart.
Yeah, this has been interesting to watch, right? And I think this kind of speaks to what Mr. Mullet was talking about in the chat. We're like, where is this money going? Like Bitcoin, I mean, when Bitcoin goes flat, I expected altcoins, particularly Ethereum, to jump much more significantly than it did. I thought when people started taking profits in Bitcoin, that money would start to flow into altcoin projects, and we'd start to see those rise up as well. But it's looking like that's not, it's happening to an extent, but not as much as we've seen it happen in the past during bull runs, where we kind of see this inverse correlation between the price of Bitcoin and Ethereum. So this is going to be, I think, maybe the most interesting thing to watch is when does some of the capital that's flowing into Bitcoin start significantly affecting these altcoins? And for me, I think the answer is pretty soon, because one major difference between Bitcoin and Ethereum currently is Ethereum's kind of facing a much stronger resistance level, in my opinion, at 500, even though it hasn't been anywhere near this range since 2017. I think it still is going to take significant momentum for it to get past this level, just because of the kind of FOMO that's going on with Bitcoin, and people are just eager to get in to as large of a Bitcoin position as possible. And once that steam kind of dies down, I anticipate that Ethereum's going to kind of skyrocket. And like we've talked about in previous episodes of Trade the Chain, it's kind of becoming increasingly, the success of Ethereum is becoming increasingly tethered to the success of Bitcoin, just because of the amount of Bitcoin wrapped up in ETH contracts. So I think that eventually we're going to see this correlation start to happen more tightly. And I think we're going to see Ethereum take off once we have a more manic takeoff with Bitcoin, which, I mean, we've been kind of speculating on where price might reach. And like we talked about, we're not really in that manic phase that we saw in 2017. It's a more grown-up bull run. So I think there's a lot of room for Ethereum to run, and I don't think there's too much downside right now. So I'm pretty bullish on it.
I know some people are feeling a little manic.
Yeah.
Starting to get friends text me, should I buy Bitcoin?
It's always around Thanksgiving when you go to see the family. People are always asking, like, should I buy it? Should I buy it? I mean,
we were chatting with a pretty well-known hedge fund manager before this, and it's a common point that he makes, which was, people always want to buy in at 18,000. No one ever wants to buy in at 4,000, and I thought that was so fitting. So come this Thanksgiving, depending on what the quarantine rules are and all that stuff, I'm sure that people who've never heard of Bitcoin, like your little nephew Johnny, are going to be asking you, "Oh my God, what's this Bitcoin thing? How can I get rich?" So it'll be all Lambos and mashed potatoes at Thanksgiving this year. This has really been. I love the fact that we hit these prices. I know we hit all-time highs in the market cap of Bitcoin this week, which was tremendous. I was happy to see that it wasn't everything that was spoken about on crypto Twitter. I actually didn't open up Twitter to read the feed for like 48 hours because I was scared. I was like, I'm going to throw up. But it turned out to be okay. But what do you guys predict we are Friday when we're on the air Friday for Trade the Chain?
I'm going to go with I'm hoping for some consolidation around our current range. So if we are at 18K and holding steady, I would be very, very happy on Friday.
Yeah. So let me get you guys a good example of a 9. So yeah, like if you see this one right here, you can see that this was not really a reversal because we were already in the midst of an uptrend. It was more of a catalyst for volatility and bullish price action. So we're approaching a 9 that's pretty similar tomorrow. And so, this doji candle, it's a little concerning, but it's not really scaring me yet for a potential reversal. I'm just looking for that catalyst price action from the 9 tomorrow. Could potentially send us to 20K. But I think we're going to get a little correction after that from a technical standpoint. But, I think this 9 is likely going to be bullish. We'll see.
All right, very cool. That's it. Ryan, just throw out a number for your dog, what he's thinking for Friday's episode price.
Ali thinks 19K.
19K. Are we, one last thing before we shut this down, are we hitting 20K before the end of the month, guys?
End of the year, definitely. End of the month. Yeah, why not? Everyone's going to have a good Christmas. We're all going to be rich.
It's pretty binary outcome, though. Like the way that we've been going up explosively, it's either like we continue that uptrend or we see a very nasty whipsaw. So
you think it's going to be
fun, volatile action?
Do you think it's going to be like that? Do you think it's going to be one extreme or the other?
Yes.
I'm sticking with my 15.5 prediction from earlier this summer and hoping I have another buying opportunity. But for the end of the year.
All right, guys. Keep stacking sats and dollar cost averaging and whatever your strategy is right now. We'll see you guys Friday. Thank you very much for joining us.